All right, guys, welcome back to the show. Today we're going to be talking about how to buy and sell your property on terms. We have with us Mr. Nick. He specializes in working with lease purchase buyers to get them into a home on a path to home ownership. Nick is the man in real estate. Welcome to the show, Nick.
Thanks for having me, Brandy. I'm excited to be here.
We are glad that you're joining us today to drop some knowledge on us, share some nuggets, if you will. So tell us, how did you get into this real estate business? A lot of people have great little stories on how they got into real estate. What is your background and how did you get into real estate?
Yeah, this is very interesting. Just how I found my way into it. I grew up in a real estate family, so when I was a kid, when I was little, my father was a builder, contractor, and then he transitioned over into the late '90s and being a realtor and then a broker owner and then an investor a little later on. And I grew up in the business. It was all I knew. Um, Going through that track though, while I was growing up, I got into a snowboarding accident. So it was 2003. I was on my way to ski club with my friends, and we brought our stuff on the bus so as not to miss a precious moment getting ready once we got there. I got to the mountain, and because I was ready, headed right towards the top. On the way to the top, I noticed, Brandy, that it was very icy. People were wiping out everywhere. Needless to say, it wasn't my first time on a snowboard. I knew what I was doing. So I got to the top and headed for the biggest jump with all my speed. And going up to the jump, I caught the edge of my snowboard, which kind of threw me off balance. So I was forced to go off the jump. In the air, I rotated all the way towards landing right on my head. Um, I was later told that I landed on my head and that the doctors told my parents that even if he comes out of the coma, he's probably not going to walk, talk, or eat again on his own. Fast forward 3 months after that, I came out of the coma and I was transported to Franciscan Children's Hospital where I learned how to walk, talk, and eat again. Then, less than 3 months after my accident, I ran out of Franciscan Children's Hospital in Boston. And shortly after that, after that, even I got home, I had to go to 6 months of outpatient rehab, physical, occupational, and speech therapy. So the work wasn't done once I got out of the hospital. Then after I finished that up, less than 2 years after my accident, I started to get the real estate itch. Around that time, my dad was an investor, had had a large company up in Central Mass, and he was an investor. He was starting to play with, Brandy, the idea of door knocking pre-foreclosure doors. All that means is they have received a notice to default from the bank, meaning that they miss 1, 2, 3, or even up to 10 and 12 payments, and the bank still hadn't foreclosed. So that's where I saw my entry. I said, I want to be one of those people on the ground going in and knocking on these doors, because he was looking for people, and it ended up being my cousin Mike and I that were the ones doing it mainly. That taught me a lot of lessons about people, about how to sell. And someone recently at one of our events that we had over the past couple of years pointed out to me that, wait a minute, after recovering from a snowboarding accident, being in a coma for 3 weeks, and having to learn how to walk, talk, and eat again, less than 2 years later, you were knocking pre-foreclosure doors, like notice to default doors, in some not so great areas of cities. And I would do 40, 45, 55, even upwards of 60 or 70 doors in a day. I went to the areas where the most concentration was of these, which obviously I wasn't thinking of it at the time, my 16-year-old mind, but probably not the best areas to buy property. Uh, However, I ended up setting a lot of appointments for our investors to come down and meet with them and buy properties. And we ended up buying a few properties down there. Uh, then after I got out of high school, I got my real estate license, was a realtor for 8 years. And then I kind of found my way into what I'm doing today, which is working with our rent to own buyers, the lease purchasers that you referenced in my introduction there, coaching them all through the path of not only getting into the home and ensuring that they'll be successful when they get started, but my assistant and I work with them all the way through the process over the course of 12, 24, or even upwards of 30, 36 months so that they will be able to get their own loan. They'll have a strong likelihood of getting their own loan when it comes to the end of their agreement. So that's the long and the short of it. Um, a mouthful, I know. I know, Brandy, it's a mouthful, but hopefully that clarifies for your listeners.
Yeah, so there's a lot of misconception about rent to own. Tell us, do rent to own really works?
Absolutely. Absolutely it works. And the reason it works, so the way that we do things, we have parameters, we have guidelines that we stick by. So because of that, because it's a little bit more stringent, then we'll throw you in a property and then every month your lease payment will be accumulating in a bank account. And then by the end of the lease, you'll have time to buy. Our program works a little differently and it's a little bit more stringent, meaning that it requires them to put a down payment down initially before they get into the home, anywhere from 3 to 10% of the purchase price of the property. And then we structure with them. One of the things that I do, structure with them once they've seen the home and we're discussing things in more detail, more down payments over the course of their lease so that by the time they do get to the end, the lender's going to see A, that they put a down payment down initially on the home. B, they've been taking care of it. They've been running it and taking care of it as if it was their own. And then C, that they've not only put that initial down payment, but they put multiple lump sum payments down over their lease. So why wouldn't they, in their right mind, approve them for the loan?
Right, that makes plenty of sense in that regard when it comes to like rent to own and things of that sort. Um, but can you tell us what does it mean to buy and sell property on your terms? What does that mean?
So where I'll just give you a few examples. So among all the examples, there are a lot of different ways that we buy property. We'll buy it on a lease purchase agreement, like we'll buy it on a rent own agreement. We'll buy it on owner financing if there is no debt on the property. So we'll buy it with owner financing and we can pay a premium for those properties that we buy with owner financing if there's no mortgage or subject to someone's existing loan. That's simplified. That there's a lot more ways and like legal maneuvers and everything that we can do it, but simplified, that's those three are the main ways that we buy properties. We're always going to be selling them through our rent to own program, which, as I mentioned, is a little bit stricter than the conventional, hey, give me first and last month's rent, I'll take you in the home, and then every month I'll be putting aside a portion of your payment going towards a down payment. It's a little bit stricter. However, because it is a little bit stricter and because our process and systems that we have established over the years, we're seeing when buyers get to the end of their lease that they're able to qualify for their own loan. We've already had several closings this year where I followed through right to the finish line. And the number one thing, Brandy, that I'm getting for feedback from these rent home buyers is once they close on the home is thank you so much for the opportunity. Thanks for taking a chance on us. Thanks for giving us the opportunity. I think it must be something that lawyers, somewhere along the way, lawyers, lenders, that they impart on these people, or they the buyers see how much work is required for them to go forward and get their own loan, that they're just so thankful we gave them the entry into having a path towards home ownership.
That's awesome. So you talk about the entryway, and you gave them a pathway to their own ownership, and so that lead us to the lease to own or rent to own option, if you will. But how do we get buyers over the finish line on obtaining their own loans, if you will? How does that happen? Are they able to get their own loans through your program, or is this always going to be a rent to own situation, if you will?
So a few things that I mentioned in passing, but I'll highlight them now. So we're selling all of our homes with a rent to own. So we'll sell to a buyer on a rent to own agreement. That's going to enable them, one, to get in the door with a down payment, but then also we turn over all maintenance responsibility and upkeep of the property over to them. So it's basically they are the owners. The only difference is that they don't have their own loan yet. Then number two, we're having them add, unless they have 10 or 20% down today and they just can't get financing for another reason. We do work with those people as well. But for the majority of the people out there, the buyers that we work with, they're just not in a position yet where they can get a loan. So we're structuring over the course of their lease additional payments towards their down payment. And the lender loves to see that because that shows that they're more and more vested in the property and more commitment from them. I'll just give you an example, Brandy. So we had a buyer sign a rent to own agreement with our attorney last night. He owns his own company. A lot of the people that we work with are self-employed. I'm just giving you an example here. He owns his own company, makes plenty of money, has money saved for the down payment. However, he just finalized a divorce. I went through his screening report because we require all of our rental home buyers to go through a screening process with our credit enhancement company. That's mycreditteam.com. They can check that out. We require that to happen before we accept them. So going through his screening report, I found out that he had missed several payments on a few cards, on um, a few cars, so credit cards, cars. And I said, Eli, what's going on with this? Like, I want to like move forward with you. However, you need to give me a little insight into this and clarity. He said, yeah, he answered me right away, said that there was no problem. However, his attorney advised him, because they're going through a divorce, that he had to, even though he didn't have a hardship, he had to miss a few payments on his credit cards in his car in order to match her in what she was missing, uh, so that he wasn't in a position where he would end up owing more money. But he said all that's been fixed and he's back on track and he has no problem making payments. So that's just one example. Someone going through a divorce. We help a lot of those people as well.
That's so awesome. So, you know, your model is kind of unique and different, but it's always been done. And so I asked you this question. What are the advantages of buying and selling a home through your model?
So with us buying, we're not signing personally. We're not putting big down payments down on houses. That's the main reason that we buy the way we do. And the way we sell through our rent to own program, you probably are aware of this, being an investor, and all the investors listening. There's only a small portion of the market that can walk into a bank or with a lender today and get a loan, it's only roughly 18 or 20%, because their guidelines are still, they're very strict. In that other 80% or 82%, I'm not saying, Brandy, I'm not saying that they're all good in there. However, in there, there's a large portion of them that have money saved for the down payment. And just as important, they make plenty of money monthly. They just, for whatever reason, death, divorce, job relocation, moving to a new area, starting a new business, they can't get a conventional bank loan today. However, with our help, and we get them part of our processes, we get them connected with a great credit enhancement company, as I mentioned before. That's who we get the screening through. They're committed to working with them over the course of their agreement. The company that we use and the owner, Paul Ritter, they've been in that business for over 20 years. Paul, I talk to Paul almost weekly. He used to write loans himself. He had a personal experience which drove him into doing the credit enhancement, and that's what he loves, and that's what he does now to this day, and that's why we use him. But he knows exactly what they need to show the rental home buyers on their whole profile. It's not just the buzzword credit. Oh, I have good credit. I don't need your program. I have good credit. It's not just credit. There are a number of factors that come into play in the full financial picture, which enables someone to get their own loan. And he's very versed in that and coaching buyers through that.
That's awesome. So Nick, drop the bomb on us. Tell us how we can locate your business, your brand. Give us some insight, and how can we look you up?
Absolutely. So they want to head over to our website. That's pre property with a Y, and I'm sure we'll drop it in the show notes. Solutions with an S at the end.com. So that's prepropertysolutions.com. If they're looking to get started on buying and explore that a little bit, we have a video right on the homepage, 5 or 10 minutes, goes over how our rent-to-own program works. It's not a good fit for everyone. Just make sure they look at that first and it's a good fit for them. And then they want to get signed up to receive our new property updates. And if you're a seller out there, just for whatever reason are not able to sell your home, the traditional market will not get you to where you want to go, your goal. Feel free to fill out a contact us form, and someone from our team will reach out to you and get in touch with you as soon as possible.
All right. Thank you, Nick, for joining us. We gladly appreciate it.
Awesome. Thank you, Brandy. I had fun.